Economic indicators are like vital signs for the economy. They tell us how healthy the economy is. Just like your temperature tells you if you have a fever, economic indicators tell us if the economy is heating up or cooling down. Understanding these indicators can help investors make smart decisions. There are many different economic indicators. Some indicators tell us about the past, others try to predict the future. Investors need to pay attention to all of these indicators to get a complete picture of the economy. One important economic indicator is the 10-year Treasury yield. This is the interest rate that the US government pays on its 10-year bonds. These bonds are considered very safe. Investors buy them when they are worried about the economy. When investors buy a lot of Treasury bonds, the yield goes down. This is because the government doesn't have to offer as much interest to get people to lend it money. A low 10-year Treasury yield can be a sign that investors are nervous about the economy. The US dollar index is another important indicator. It measures the value of the US dollar against other currencies. When the dollar is strong, it can buy more of other currencies. This can make US exports more expensive and imports cheaper. Former President Trump imposed tariffs on goods from China. These tariffs are taxes on imports. Tariffs make imported goods more expensive. This can hurt consumers and businesses that rely on those goods. The S&P 500 is a stock market index that tracks the performance of 500 large companies listed on US stock exchanges. It is considered a good indicator of the overall health of the US stock market. All of the factors we have discussed, Treasury yields, the US dollar index, and tariffs, can affect the S&P 500. For example, when the 10-year Treasury yield rises, it can make stocks look less attractive to investors. This is because investors can earn a higher return on their investment in bonds when yields are high. A strong US dollar can also hurt the S&P 500, as it can make US exports less competitive, and tariffs can hurt the S&P 500 by increasing costs for businesses and consumers. In conclusion, it is important to pay attention to economic indicators like Treasury yields, the US dollar index, and tariffs. These indicators can give us clues about the future direction of the economy and the stock market.